Hello again. You're watching Today on eNCA with me, Dan Moyane. Now, the rise in food prices has been a concern for many across the globe. But experts are warning that global food prices now have tumbled. They claim wheat and corn prices have gone down to prices that were there before the Ukraine-Russia war. Other food items such as cereals, oil and staples of diet have also returned to normal prices. It is a relief for consumers who are already struggling to make ends meet. When will South Africans then feel the effects of this decline in food prices? Let's talk about this now with our agricultural economist, Wandile Sihlobo, who's joining us this hour. Wandile, very good afternoon to you. Should we in South Africa as well expect to benefit from what is being described as this notable reduction or decline in food prices or in prices of some foodstuffs?
Yeah, thanks, Brad Dan, for having me on. I think there's a couple of things here, Brad Dan. I would like to make 3 quick points because I think we are indeed starting to see a bit of softening in global agricultural prices from levels that we saw just after the invasion around about March or so. But we are not going back in the near term, Braden, to levels pre-war. I would say categorize them as maybe around about the start of COVID-19 or even 2019 onto that. There's still going to be a while until we get into that point. And there's a number of reasons for this, Braden. Firstly being the fact that even before the war, food prices globally were somewhat on the upward trajectory. Drought in South America, high demand in China were among some of those factors that were driving prices up. And it seems like those will continue to prevail. So yes, we will see prices coming off from the pre-war, from around about the intense war levels, but we're not going back to the pre-war levels in the near term. That's one of the first factor onto that. But I think then we have to consider also the lag between the agricultural prices and what people pay in the retail prices when we think about food prices coming down and the other costs baked onto that, like fuel and the others. So I would say food price inflation in general will remain elevated, even though we will see agricultural prices somewhat softening from levels we saw around about April, March or so.
So not in the near term. So what's the outlook like then? By when? I mean, come December, come January? Because some food items, for example, like palm oil, I don't know how much palm oil is used in our country, but has gone back, declined below the levels before the war. But sunflower oil, as we know, it's still very, very, very high. And the Ukraine and Russia, they export that as well, plus wheat.
Yeah, I mean, absolutely, Braden. You probably saw the numbers that we received here in South Africa about a day or 2 ago, where we were looking at consumer food price inflation data, which showed that in July, we still hit about 10%, which is the fastest pace since around about January 2017. So absolutely, we are in those relatively higher levels, but we could see the headline food price inflation, which is the rate at which prices are rising, softening somewhat for much of the second half of this year. But going into the retail stores, but looking for that decline on prices, I think, Braden, I mean, you have to look into some time next year on seeing some bit of softening on some of those products, particularly those linked to what you are referring to, vegetable oils, to an extent around about the grain-related prices. Where we hope to see much more notable relief is prices of vegetables, fruits, and to an extent even on the meat part. But I think then the perhaps maybe positive message is that we don't expect prices to rise at a much faster pace than what they currently are. For much of the second half of the year, we could see that pace of an increase in prices softening, which refers to the very point that you are putting forward, Braden. Because yes, one must say the fact that since Ukraine started opening up, at least in as far as the exports of grain, we are starting to see a bit of a softening in the international prices. And in fact, to your own point, if you look at the global agricultural prices, in July, they were down 9% from June, and they've been on a downward trajectory for the past 4 months. But if you were to compare the levels to the pre-war levels, we're still not yet there. And that's the point that I was trying to caution on, as well as the fuel effect into the food production.
Yeah, and we know how that fuel affects so many other things in economic activity. So the pace of increase is slowing down, which is good. There's a bit of softening of the prices, but not really too fast. But we get to see the benefit. I mean, there's a hope there that by sometime next year, things might even be better than December this year.
No, absolutely, Braden. And I would even add there, Braden, to say if you were to look at a food price inflation in South Africa, you compare to much of the world in the EU, much of the Africa region, and even in the US, we're still seeing prices rising at a softer pace in South Africa so far. And we think that we might have hit the peak with the July data that we received from Stats SA this week. And we think going forward, that pace, as you rightly put it, will start to soften. The appreciation that we just have to have, Braden, is on the lag between the agricultural prices and what we get to pay in the retail stores. Because normally on things like, for example, maize meal, you would see that there's a 3-month lag between the change at a farm gate and the change what we get to pay when we go to buy maize meal or a SEMP prices. And that's the issues that I think we have to consider. But I think we've seen the worst times in as far as the rise in the prices, and that pace should soften for much of the second part of the year.
That sounds very hopeful. Thank you very much, Wandile Sihlobo there. He's an agricultural economist, just painting that picture for us. Yes, agricultural prices worldwide declining at a very good pace, but that's softening. We can only feel the impact on the retail side, on the shelves of the supermarket when you go and buy the produce like 3 or 4 months later. So we are hopeful that by the end of the year, you'll be paying less than you're paying today, and by next year, you'll even be paying far less than you are paying currently. It's been really, really hard for everybody.